what I'm looking at is Tqqq, which is the triple leverage QQQ ETF that tracks the Nasdaq 100. And in the specifics, I'm looking at the option chain with an expiration date of February 27th, 2026. Today's date, January 14th, 2026. So this is 6 weeks out. And I do own already 100 shares of Tqqq, possibly carrying it about $50 a share. And I am thinking of writing a cover call deep in the money. And that's why I feel that the stock market is going to soften up in the next couple of months. So that's gonna give me a protection on my pre-existing shares. So let's say that I carry again 100 shares at $50 a share. I have a cost basis of $5,000. In the case the market drops and let's say that Tqqq drops to $45 each. Now in that case I'm gonna have a pretty sizable loss of money. But if I was to write a cover call today, I'm gonna get paid today about $950 deposit on my account, and that's gonna give me like a buffer in the case the market drops. But I am positive that the market, I shouldn't say it is overvalued, but it's definitely high priced. Okay, so it's been a huge bull run, and like it's been said, trees don't grow to the sky. So I'm gonna write today a cover call with a strike price of $45 a share. Now notice something. Today Tqqq is down about 5% and it's trading about $53 a share. In the case it drops to 45, that would be a $8 a share drop. And so in theory I am losing $8 a share. Now of course I carry this $50 a share. So in this case I would lose $5 a share in my case, and I'm gonna get paid about I would say $9.50. It's gonna be anything in between the bid and the ask, anything between $9.30 a share and $9.95 a share. So even if my shares are gonna be called away, I'm gonna have a loss of $5 a share, and I'm gonna get paid today here $9.50 a share. So I think it makes a lot of sense doing that, and I'm doing it 6 weeks out. So anything can happen between now and February 27th. I believe the more likely scenario is that nothing happens. I think it's gonna fluctuate the Tqqq in between possibly 45 and 55, and in that case I'm just gonna keep my premium, and I'm gonna keep my shares probably. At expiration day, we'll see if the buyer decides to exercise the option or not. But anyways, I am making today about $1,000 on an investment of $5,000. So I am making today, I'm being paid today in advance 20% return on my money. Now think about it. $5,000, I'm going to make nearly $1,000 in top of the $5,000. Now let me tell you something. What options do you really have? I mean, if you had $5,000, you can put it into the S&P 500, and I don't think that the S&P 500 is going to return 20% of your money in the next 6 weeks. Not at all. I actually think that the S&P 500 is gonna drop because, like everyone knows, it's not even the S&P 500 anymore. It's the S&P 1, NVIDIA. What if something happens to NVIDIA? So I'm gonna go ahead and do this. I think it makes a lot of sense. So once again, strike price 45. Let me go to my E-Trade account, and what I'm looking at is the Tqqq. Again, it's down about 5% today. What I'm going to do, I am going to go under options. I'm gonna zoom in a little bit, and I am going to go all the way out February 27th. And I'm gonna look for my option, call inputs. Let's do calls only. Strikes. Got 11 strikes. Let me open that up to all. Okay, 45 was my strike price. The last option was $9.54 trade. Okay, once again, it's a call option. I'm gonna sell the option, and it's a one contract, 100 shares of Tqqq. Strike price 45. Once again, trading at 53, 45. There are $8 there, but I'm gonna collect possibly $9.50 today, and I think it makes a lot of sense. I'm gonna put this market. So this is the amount is gonna be deposited in my account today, $929 with 48 cents. They're gonna charge me a 50 cents commission there. This is the order preview. Everything looks good. $929 deposited today. And okay, the order has been placed. Now going back to let me see something here. under the transactions. I wanted to see if it appears the transaction. It doesn't, but anyways, real soon you're gonna see here the deposit of $950 deposited. Now what I'm gonna do with that money, you're looking at nearly $1,000, and what I do usually is I generate income. Now, just so you guys know, this is one of my income accounts. I have a few chaining account, a growth account, a dividend account, my retirement account, and I do several strategies, but this is one of my income accounts. And this is BUA, which is cover call ETF on utilities infrastructure. And the good thing about this is that they pay monthly dividends. They just paid a special dividend here of over $1 a share, but if you look at the payout history, they usually pay in January, about mid-January. In 2025 they pay 15th of January. In 2026 they are going to pay the 20th of January. And I like this cover call ETF a lot. It's got a dividend of over 6%. As of this recording, the dividend is 6.3%, and you also get a little bit of appreciation. Now, of course, it is a cover call ETF, and what that means is that your upside is capped. But I think it is a good place to park your money. So today I made 20% of my original investment of $5,000, and I am going to invest that $1,000 into BUI, and from now to February 27th I am going to collect at least 2 monthly dividends. Now, of course, this is a position that I have a bunch of it, and I do it for monthly income. I think it's real good. I rather do this than do dividend stocks or junk bonds, because it keeps the principle very consistent. Of course, anything can happen. Over the past 10 years, is up 65%, and on top of that is paying you 6.3% yearly. So I hope this video is gonna give you an idea of how I run my income accounts, and you can do it too. Okay, so right in here you see that today's day, January 14th, 2026, I sold a call of Tqq's, and $929 were deposited in my account. Well, happy trading, everyone.